Welcome to askSlim Live, July 7th, 2020. Information and support for traders and investors in a time of crisis and beyond. I'm sure we have many people in here that have been here for the first time. We're going to check that out in a moment. Just a little bit of work to do here first. This just tells you that everything we do is for entertainment and educational purposes only. You should check, of course, with your investment advisor before you make any decisions. Everything that is on our website, whether it be in video or oral or in webinars like this, is the same thing. It is simply for entertainment and educational purposes, and all we want is to make you better traders. Live events are being held to support for members and are not included in memberships. They're created for times of a special need. Note, these events are likely to be recorded. This one is being recorded and offered on our website, and at times will be offered for public viewing. We always protect your identity. We do not share your information ever, nor do we market through third parties or with third parties. So we just absolutely are so careful about that. We never want to do that for any of our members. I know you trust us. We want always to keep your trust. Though your participation in this event acknowledges that you agree that we cannot keep you completely, your identity completely anonymous when we're doing these videos. So if you participate, it says that you have agreed with that. Today's hosts are me. I've been in this for 46 years, a professional trader, futures trader, option trader, member of the CBOE, Mercantile Exchange, Chicago Board of Trade. I have been an off-the-floor trader. I was one of the first traders to leave the floor in 1984 and head up to an office and trade on the screens. So I have a long time trading out of the trading pit. Hedge fund I had was a swing edge hedge fund where I was essentially a pretty short-term swing trader in a hedge fund, and it was a pretty unusual fund. Did well, but I did not like trading other people's money. So I did end that after 2.5 years. And I have a great team now that's working with me, and I'm gonna let Matt and Arvi introduce themselves. Matt, take it.
Hey everybody, this is Matt Serpi with askSlim. I'm a 20-year technical analyst. I am direct protege and mentee of Slim, a graduate of the askSlim coaching program, a former askSlim managed futures broker. Currently, I'm the COO and Director of Product Innovation. Excited to be here with you guys today.
Hey everyone, I have been here since for about 5 years now. I have been doing this for the past 10 years or so. So I absolutely love this overall work, and if you have anything that I can help you with, please, or you can always send me an email as well. So
great. Okay, so we have a large crowd here today. Please check out, and you can see how you raise your hand if you're new to using Zoom. You can see how you raise your hand. Any first-time people for our webinar, please raise your hand. Okay, we have some, not a huge amount, but we have some people that are first-time people here today. That's great. We're glad to have you. We did invite a pretty broad list of people to come today, so we do have a pretty large crowd. We hope we can handle the questions that we have. We're going to do this a little bit different than we have other days. We've been sharing a lot about our content on these webinars. And we're going to pretty much let you drive it today. If you don't have questions, then we're not going to have answers. I'm going to start out by giving you a brief on the market. The markets have certainly been interesting. And then we'll open up the floor. You'll note that a lot of people are using the chat. We would prefer that you put your questions in the Q&A. Then we'll be able to track them better. And I will hopefully be giving you some great information, and all of us will. Anything about content or stock index report, the ETF report, the momentum tracker, that's all going to be on Matt. Things on stocks and stuff like that are going to be on Arvi and I will be very pleased to answer any question that you have about trading issues also, not just analysis. So Hope that we can fulfill your needs today. We're going to try to keep this under an hour, so hopefully we'll be able to do that, and we'll be able to answer all of your questions. So let's get into the analysis here as I switch over to the charts. Going to move into a side-by-side here. We'll come back to the Nasdaq in a moment. We'll go to the S&P 500. So these are pretty busy charts. Anybody raise your hand if you're not familiar with our charts that I'm putting up right now? Okay, so nobody is. Everybody out there is familiar with the way that we do charts. Oh, there was a few people that put up. So, okay, so I'll do a little explanation there. These are our side-by-side charts where we're looking at a weekly chart over here and a daily chart over here. This is cycle analysis. Cycle analysis looks at the rhythms of the market. They call this the heartbeat of the market. And there are a multitude of cycles in any chart or any symbol. What we do is try to keep it down to 2 or 3 of the most dominant chart patterns so that you will then be able to have a good understanding of it, and we will also. So these arcs that you see on the bottom are called cycle brackets. On the Thinkorswim platform, that's how they're labeled. Other systems have different versions of this. There's also cycle lines. They call them cycle arcs. The gift that we get in here is just simply we get to see the energy of the market. And then it's up to the analyst to look at multiple time frames, support resistances, momentum conditions, in order to do the analysis that we do. So I'm going to break down the S&P 500 in here for you to see. And I'm going to start out by blowing up the weekly chart here in the S&P 500 and just show you a little bit further out. Now, these yellow zones that you're seeing are the corrective zones. When the small cycle right in here and the big cycle nests, when they're coming down together, and you can see there's actually a shifted cycle in there. That's the dotted line because this cycle got long. So we want to look at how that affects things. Actually, it lines up perfectly over here. And when you get into these declining phases, you get declines, corrections. This was 250 points in the S&Ps. This was about 170 points in the S&Ps. And you know this was a collapse of about 1,200 and something points in the S&Ps, about 35%, 38% on the Dow. So what we try to do is see configuration. What that means is that if a cycle bottoms way above where it began, the probability is that the next cycle will make a higher high. And you see that here. And if a cycle closes below where it began, which is like this one right over here, the odds are that it will not get above that level. Well, it got close to it or up to it equally, which shows a lot of strength. In this case, this cycle way below where it started here, and then the next cycle should not make a higher high. And the fact that it got to the 78.6% shows an extraordinary condition when it did that. We always look at what the highest probabilities are for markets, and the highest probability was that it would fail somewhere under the 61.8%, somewhere right on over here, but it actually got through it all the way through the 78.6, which is certainly influenced by the liquidity that's being poured into the market based on the economic and medical crisis that we have going on right now. So you can see this corrective period, and here it gave you about 4 weeks of collapse. This was about 3 weeks of decline. This was about 4 to 5 weeks of decline. And right now we're in here in this last 4 weeks or so. And that's why we're looking at these yellow corrective nested cycles and have believed that this was going to turn over and decline. Based on the normal decline, it would take you down to about that 38.2% of about 2830. So that's been our target. The fact that it got stronger and lasted longer in here always makes us suspicious, as there's less time, that it won't get quite that far on the downside. But the probabilities are high of a decline right over here. If it just chops around in the same area, it will tell us of immense strength, and that this rising phase over here will likely come from a higher level and move to a higher level, because the markets will speak to us in that way and tell us about it. So we're looking at momentum in here. Momentum right over here on the intermediate is rising. When momentum turns down, like it did right over here, well, that sets you up for the correction. Now, the longer the market holds up, the shorter the correction, the longer it takes for momentum to turn down, and that's a sign of strength. So for this correction to be normal, it will fall pretty hard in a brief period of time. So what we want to do is we want to look at the daily chart and say, well, how does that line up? And what do we know about the cyclical patterns right in here? So this chart, let me just blow this up right over here. This shows you shorter cycles on the daily chart. But I'm going to show you the Nasdaq in a second, which is just phenomenally clear. This is clear also. The cycles have been moving around between 18 and 20 days. On this dominant, we have it set up now at 20. That's about the average. We're looking at 19 or 20. I got fooled in here, and it's pretty clear. And that is, when you get a rally and then it comes down below the 78.6, the probabilities of this next rising phase getting back up above this level are only about 20%. So this amount of this rally fooled me. Still, you can see the momentum turned positive right over here. It was strong the whole way. It got into a choppy neutral momentum right over here and then turned positive again. Now we look at the projection oscillator with momentum here on the daily charts, and what that tells us is a confirmation. Everywhere you see buy tells us that it confirms the strong momentum, and it tells us that at these locations is where you would either buy or add to your positions, or just simply have confidence that momentum was staying strong and moving up. And right now, you see, you only got 1 day in here, or 2 days, where it kind of rolled over a little bit and went neutral and then went strong again. So I got fooled by this, and I will always get fooled by this because I'm always looking for the highest odds. And in this case, it only came down here. It didn't break down below this level right over here, which would have been a lot of trouble. We had it labeled that 2965 area, but it didn't get that low. So it didn't really break down, but the shape of it is what fooled me. And you can see the shape of this cycle is really sideways. It's not like it has a lot of strength, and it's still under the island over here. So this still looks to me like this decline is coming. Friday, we called it 5 to 7 days. Now I'm going to call it 3 or 4 more days on the downside. And that's what I think we're going to get right over here. I have more charts to show you because I want to look at this in depth a little more. So let's just go to a 2-hour chart right over here. Now this 2-hour chart shows you the daily cycles, but it's on 2 hours. And what we look at here is momentum conditions and how you want to bias your positions. So if you were a trader, a short-term trader, you want to know what should your directional decisions be? Well, this chart gives you more information about that than you will ever see. First of all, on the bottom over here, we have the market condition indicator, and the market condition indicator went positive actually over here after it was negative and crossed over, and that's a positive occurrence. It's been basically positive in here, but weakening. It had a positive test of the swing zone, which is 25 to minus 25. So that is still a show of strength also in the S&P 500. Again, these are your momentum conditions, buy modes right in here. You don't want to ever have short biases when you're in this position. We label it short-term positive trading bias, positive trading bias. What that takes is a confirmation of the slim ribbon turning positive. And after that, it does it that you take out the high of the previous day. So that gives us our positive conditions. We had a long one right over here. We have one, this was, just a chop. There was chop, tight ribbon, no confirmations, nothing in there. And then it turned positive right in here. So again, you would not want to have a short position during this period. You're in buy mode. You're getting these buy confirmations right over here. Let's just look at this last 2 cycles a little bit closer, and you can see. So we're still in buy mode. As a matter of fact, we're buy pending right now that you can see right over there. But if this crosses over, if that 8 crosses over the 13 EMA, you will lose this condition, and then we'll be in that corrective mode that we're expecting. I'm going to switch over and show you the Nasdaq in this right now so you can see how it looks a little bit different. And look at the beauty in here. Let's just look at all of these cycles right over here. I have outlaid a 10-day cycle in here that is exquisite. You can see in here that each of these cycles rally and then correct, rally and correct. You can see the rhythmic motion in here as we identify the cycles. This one's a little longer. This one's right on, and we're here right over here. We're in this short-term positive phase that you can see right there. And you can see right over here, all of these positive trading bias conditions. Look at the market condition indicator on the bottom. It has been solid green that whole time, between 70 and 100 basically, which is telling you how strong the conditions are. You can learn about the market condition indicator if you come onto our site and watch the video on that. That is available only to our level 4 members, by the way. So this is, again, a strong condition that we're in, and you want to be long when it's telling you to be long. This is for short-term traders, and to me, it is very, very clear. Upward biases are clear with those momentums, and then when they roll over, they get pretty clear also. So again, when you look right over here, you can see on these shorter-term cycles, when the momentum, you lose the momentum, you go into a decline. You lose the momentum, you go into a decline. And we have not lost the momentum yet. I think that's pretty clear when you look at that. Let's just go over to the Nasdaq, and you'll be able to see the daily and the weekly chart. Let's just go back to the weekly for 1 second. And of course, the Nasdaq exploded past all the resistances, moved up past those fib extensions, and got to levels that, well, we would have never expected, being led by huge buying in these stay-at-home stocks is essentially what they are, benefiting from this environment, and money pouring in and pushing them up to levels that are just crazy, if you ask me. It's almost like the dot-com bubble with some of these PEs that we're looking at. So we have this reversal that it looks like right now. And you can see now this projection is to the 23%. It is stronger, so we're not projecting down to the 38% like we did on the S&P 500. So still, the risks go through August on all of these, and we're looking for that decline right over there. When you look at the daily chart, this gives you, for those of you, if you've taken our cycle analysis workshop, raise your hand so that I know who's out there that has done that. Anybody? Okay, so there's quite a number of people that have taken our cycle analysis workshop. Wow, I'm really happy. Thank you. So this is the, when I tell you that this is a perfect example of the principle of summation, raise your hand if you understand that. Great. So what that means is that if there was a directional component right over here, and that directional component is clearly up, you can see that. If you add these cycles, these arcs that you see to the upward directional component, you get what you see here on the chart. It's just very clear. It's perfect. Again, the cycle that we're in really said to me that because it came down as far as it did, there was not a good likelihood that it was going to move up the way that it did again. It hit the fib projection right there, that target zone. But this one never lost its upward momentum, as you can see right over here. Never at all. Continues to show you that strength in there. So if I go to the 2-hour chart, I'm just going to keep flipping around in here because it is so interesting. If I go back to that 2-hour chart, you can see right there that that is those shorter term daily cycles showing up, shows you that strength. It breaks it down into 2 hours from what we see here on the daily chart. So what are we looking for now? We're looking for this few days right in here, but based on the configuration that you see right over here and translation, these are right-hand translations. In other words, the peak is made way on the right side of the cycle, way on the right side. It only does this under very bullish conditions. Well, that says to you a few days down and the market's going to go up again. So that's, to me, incredibly clear. And as much as I believe there's a correction coming into August, I have to stick to what I see here in the shorter term. This speaks to you, and it says momentum is strong. There's only a small window for correction. The probabilities are it will come down somewhat, it will rally again, and then the risks pick up out over here where this cycle comes down right over there. That lines up with where the cycle I showed you on the weekly. If I highlight this right over here, that shows you around the first week or potentially the second week of August is when this low comes. That gives you that about 4-week period of decline. Maybe it's only a 3-week period of decline when you look at that. And that lines up with everything else I showed you in the daily and weekly charts where we're looking for a correction. So I went into this with a lot of depth. If there's any questions about it, I'll be glad to answer them. I think, Matt, I think you said you had a little bit to talk about before we open up the floor.
Yeah, I just want to make sure that everybody has a chance to ask their questions regarding any of the services, whether those are the SIR products, the daily snapshot, the SIR weekly, the intraday live stream that we send out with the intraday SIR grid, the Future Speak show that gets put out, trade ideas, ranking systems, our Slimulator products, either the ranking systems or momentum tracker, chart requests that level 4 members get to have. You know, anything, this is a great time and opportunity to ask those questions if you have them. So I do see a few questions in here, Slim, on content. There's some on trading. There's some on the charts. Where would you like to start?
Well, the first question is for me, and I think I kind of covered this. The markets have required upgrades in the last month. That's correct. That's because as the patterns change, as they begin to give us data based on the shape of them and the magnitude of the different phases, the rising or declining phases, then it tells us essentially what the highest probabilities are. They don't always work out, of course, but that we will then adjust. And we did adjust in there. The question is, does the strength of the current market have us adjust our view into 2021? Well, that's really a great question. And I'm going to bring in our monthly chart right over here for you to see. So this is the monthly chart of the S&P 500. And when you look at this, you'll see the phenomenal cyclical patterns in there and the cycle harmonics. So I actually want to, I have a little later one right over here, and there it is right there. That is not it. There we go. Okay. So you can see the cycle harmonics here are 1939 and 76 months. You see that 2007 peak, and you see the decline into the nested low. Phenomenal. If you look at that 2000 peak before that, you could see the decline into the nested low. So you have almost a perfect cyclical timing here. You see the mini bear in 2016 comes down right over here. Right, where is it? It's a little bit late, but well within the principle of variation for those of you that are students of cycle analysis. So now if you look at this right over here, you can see that what is significant is that you see this middle cycle right over here. Look at the translation. It's super strong. It barely could decline right over there. This middle one right over here gave you a little bigger decline, and this minor quarter right over here broke this low. When we see that, the probabilities of a bear market existing are, well, at least 4 to 1. So those of you that, you know, there's a lot of people out there, they hear me say bear market and they say, yeah, sure, bear market. We just rallied 47% and you can't possibly be in a bear market. Of course, could you possibly have a 4-week bear market right over there? You can't possibly have that either, right? So this, I contend that this rally over here, when it is over with, even if it challenges that high over there, that then we get into these periods right over here, which will be a lot of problems in towards the end of 2021. So this rally over here doesn't really change it much. You can see the megaphone that's forming in here, or the broadening top that's in there. I call it a broadening top. It's a broadening pattern. The probabilities remain very high that somewhere out over here between probably October and maybe January, February of next year is where this is going to turn down in a very significant way. Depends really on how those intermediate patterns form. But I wanted to show you this so you can get an idea that, when I say bear market, I say bear market for a reason, because of the probabilities we're looking at. So if you look at one more thing I wanted to show you in here, if you look at the minor quarter, the last quarter right over here, this already was in a bear market. You could see that. And then you had a feeble rally and then a very large decline. When you look at the last quarter right over here, you actually made a higher high right over there, though that decline wasn't anywhere near as strong, but you made a higher high in this fourth minor cycle. So if you make a little higher high here, it's not going to really dissuade me, because look what happened here when momentum turned down. Look at right over here on the monthly. Well, momentum has already turned down. So you need to be concerned that this is a manipulated rally that isn't real, and that the potential is that it will be moving down again sharply at some time. And I've had a lot of criticism about this. I really have to stick to what I think is the highest probabilities, and I think that answers it pretty clearly. At least I hope that one did. Robert says, a month ago you reviewed the VIX. Could you please review your analysis currently on the VIX? I will do that for you. So here is the VIX. We're looking at a weekly. I'm going to move this out to get the right alignments on a 10-year weekly, and I'm going to move this out to a 2-year daily. So what we're looking at here is a mess. Of course, there's tons of great information in here. Remember, when the VIX goes up, the market's going down. Some people say, well, that's true, but do you really understand why that is? Well, it's because of how much insurance an investor is willing to pay. The more worried they are, the higher that they'll pay for insurance. Buying insurance essentially means buying puts. So when puts are bid, implied volatilities go up. Now we were at a 12 implied volatility or lower for such a long period of time. People forgot that implied volatilities can get much higher. Let's look at where we are right now, and having trouble blowing this up because there we go. So let's look at where we are right now. If you look at right in here, these are the cyclical patterns, and they are exceptionally clear. When we were right here, those of you that follow me pretty closely know I put this green circle in here. We hadn't been trading here yet, but I was saying that we're getting into the next first quarter cycle, like here and here and here. And that brings us into a period of a long period of time where we could get higher implied volatilities. And that's what we got. Now, we had a huge move up here. Implied volatility is getting up over 85, just extraordinary. And this right over here was just that monstrous move to the upside. And then we had this decline right over here, which is in this minor second quarter. So now we're kind of testing the lows in implied volatility here. And it says to me that we're about to get into a period where we get an upside pop in implied volatilities, a demand for insurance. That means the market would be going down. And you can see right over here, we have it projected up until sometime in August, up to a level of maybe 50, maybe 45 over these next several weeks until somewhere into mid-August maybe, where the market goes into this correction. So we would expect that these rising phases right in here are going to take over. And then when that's over with and we get towards the election time or the end of that corrective period we're looking for, we would expect that implied volatilities would remain flat to a little bit lower after that. But we're getting into this window now where we think implied volatilities will rally. So this minor quarter right over here bottomed a little bit late. Why is that? Well, the stock market bottomed a little bit, rallied a little bit longer than we expected. So what we're looking for now is for a pop in implied volatilities, some kind of a drop, and then another pop over here as we get this market declining out into August. So that's a look at the VIX, and I hope that answers that question very clearly. There's a question in here. I trade the SPX mini futures and use your live stream link and love it. Matt, I'm going to let you take that. Do they correlate in support and resistance levels, even if the futures are not in terms of price? So I think it's futures versus cash, Matt.
Sure. All right, I'll share my screen real quick. Okay, you should see today's intraday grid. If you can, please just raise your hand. All right, very good. So yes, the best way to explain this is that the price action, the price movement should mirror what's happening on this grid in the futures related to the cash. So obviously the price levels will not match, but when the thresholds are violated. So for example, let's look at the Nasdaq, the NDX. When this resistance slash acceleration line is violated, then we would expect that you have the same price movement in the futures as well. So that's how this is designed. If others that are using this regularly witness something differently, please let me know. But they should be mirroring each other during the regular market hours in terms of the price movement. Hope that helped.
Yep, thanks.
Yep.
Okay, Matt. We have a question. Why do you, for me, why do you use the 25 and 75 on the projection oscillator versus the 80 and 20? You know, it's more about the, from a lot of back testing, a lot of times the projection oscillator gets only to the 75 or 80 and then reverses. So it's not so much about that it needs to cross back over it when it gets overbought or oversold. It's much more about that sometimes it just doesn't go down that far. And usually that's a strong buy or strong sell because the markets are pretty strong or weak at that time. So if it turns up from 25, it just shows you it's a stronger market. If it turns down from 75, it shows you that it's a weaker market. So it's just, I think, a little better information that I see on that. So thanks a lot for that. Let's see, what factors determine the buy or sell confirmation? Other indicators, momentum. I think you're talking about on the 2-hour chart. For me, what I look at in there is the slim ribbon and the previous day's high and low. So when the slim ribbon goes positive, sometimes it does that and all of a sudden it stops. You get into a choppy area. So what I look for is a confirmation that the next day has a closing bar above that day's high or low when it pierced that, when it turned positive or negative on the slim ribbon. That that to me is a better confirmation. It just takes some of the whipsaw out of it especially when the slim ribbons are really close together. Michael says he sent an email this morning, but wanted to mention it looks like ES and MYM have megaphone patterns. Close today, the close today looks like it broke it. Would that be something that would have a longer term impact or just help confirm the daily cycle peak? Well, I think you're talking about daily charts. So to me, it would be just simply the daily cycle peak. Now, the next thing that you would be considering would be what the following rally looks like, and then that would give you a little bit more information. I'm just going to come off the VIX right over here. and just put up the S&P 500 right over here. So is this what, I'm not sure if you're looking at the megaphone on here. It's more of a triangular shape than it is a megaphone. So I'm not sure if that's what you're looking at, but I'm just going to stay with the same lesson that I was looking at, that I was talking about. And that is that if this cycle came down, if this corrective period came down deep and the next rally did not equal this high, that would give you a real clear information that you were in this corrective period. So again, I always tell you that we go to school during these declining phases, these rally phases. It tells us the condition of the market. So it would need a big dip and then a rally that did not make the high of the previous cycle and then turning down again to confirm that the cycle had peaked and we were also in a decline. Question from Everett: have you ever thought about also plotting cycle tops together with cycle bottoms? So for a bottom short term, we're looking for 713 on the S&P 500. How about also trying to nail the turning point on the top side? So interesting. If you get the Profit Magic of Stock Transaction Timing, which is essentially the book that started it all for me, J.M. Hurst talks about the rhythms of the market and the measurements of cycles, which are measured from low to low. The peaks can actually be anywhere, and the location of the peak is important to the analysis. So there are some analysts out there that can invert the cycle brackets on their systems. I don't know how they do it. I can't do it on mine, and do look at that. But I do believe that just observationally, you can get a sense for the values of the location of the peaks, but it's really very, very hard to use cycle analysis to project where the peak will be versus projecting where the bottom will be. It's just that way in nature. When you look at a heart monitor or an oscilloscope, all of that is measured from low to low in those cycle lengths. So that's just how it is in nature, and I follow that. Talk about gold and silver relationships and direction. Mark is asking that question. So I'm going to put up the gold and silver chart. I'm going to ask Arvi to take over after that and to do some analysis on the GDX, which I think is a valid conversation as far as that goes. So let's just put gold. I have upgraded gold a little bit today, and that'll show up for our members on the charts in the next update, which is going to be tomorrow. So you can see gold moving up. Now the gold pattern pretty clear. Now again, when you look at this cycle in here and the no way that it could give any ground on the downside, it looked exactly like this over here or this over here. This brought a $300 impulse. This brought a $340 upward impulse. And we're expecting that the next upward impulse projects to about 2,000 on the upside. That's, in our opinion, going to get you into that upward target zone over there. That's 1940 up to about 2010 up there, and that's our target. When you look at the daily chart, you can see right here, this took off again. You can see the upward momentum. It's clear. The buy down on the bottom on that projection oscillator, very clear, gives you just a perfect tip off that this was going to be moving up again. We talked about the fact that that this was a corrective period potentially, but if it wanted to, it could take off right there. It wasn't, we didn't lose the upside momentum. This is still strong. So this right over here is about 18.25. It could stop right over here. It could get to 18.25. We'd expect there would be a little corrective period in this nested area. And then after that is where we think there's a potential for an upward explosion up towards those fib target zones up there, up towards 1850, 1875, 1900, the 61.8 right there is at 1880. So there's just lots of targets up there that we're headed, and we have been bullish, and the patterns have proven that. Now, it's not that, I'm bullish and they're going up. I'm agnostic. I'm just telling you what I'm reading here, and the patterns are suggestive of something going up. So, I'm not just bullish or bearish. I mean, everything is about what the charts tell me, and I just share the highest probabilities. Silver /SI. Matt, you might also bring in Newmont and PAAS also in this conversation. Where are we right now? We're on the weekly chart, right? I don't have these charts completely set up because I'm on a different studio setup here. Here you could see it's doing something similar to gold. It gave you that kind of top look, but now it's moving back up towards that area. This looks to me like it's going to get up to maybe 1950 and then give you a little bit of a correction. So that still looks quite strong when I look at that. And we'll take a look here at the daily chart right there. And you could see the beauty of this. Now, this is immensely strong. Now, if you forget that, if you weren't looking at my cycles there, raise your hand if you understand what makes this immensely strong. Good, good. Lots of people raising their hands. So what this is showing you is that this cycle right over here is swamped. What that means is that the directional component or the strength from this bigger pattern right over here is so strong that it will not allow any correction in here. You could see this sideways movement in here. That is just phenomenally strong. And the probabilities of that spike up into the 1950s are very high. We probably started it here. You could get a little bit more of a pullback, but I think you're gonna very possibly get a move up of 70 cents to $1 here in the next few weeks. One of the things that I want to talk about a little bit is that if you look at the auction, the 3-year auction today, a massive amount of money auctioned, and it was successful. There's a tremendous amount of buyers for the U.S. paper. And what does that mean? It means that the bond market is not ready to punish the Fed yet. So in other words, the Fed can keep printing money, they can keep monetizing, and if they do that, it makes the dollar's value decline. If that's the case, silver and gold go up. And that's why you see the market strengthen today. It's because the bond market took off. It's because of the good look at that auction for the 3 years, and that's just fuel for higher prices in these metals. So sometimes I really like to put the story behind what I'm looking at here in the charts, because I want to really be able to make sense of it. Why is this pattern so immensely strong right now? So there's a story behind it. The money is flowing. There's a huge amount of printing going on. At some point, can you imagine if money starts coming out of stocks and starts going into real stores of value, where these prices could go? I'm not one of those doomsayers that says gold's going to 5,000 unless the patterns tell me so. And right now, the background on this says these prices are going higher, and it matches the patterns that we're looking at. So that's my discussion of silver and gold. I'm going to let Arvi take it over, walk you through the GDX and maybe a couple of metals mining stocks. Can you do that, Arvi?
Sure, absolutely.
Good.
Just give me 1 second. I'll load up the screen here. We're going to look at GDX first. So this is our weekly chart of GDX. Let me see if you can see it here. Let me know if you guys can see my chart.
I see it.
Okay, perfect. All right, so this is our chart of GDX here. Let me go back to the daily here for 1 minute. So this is our dominant cycle right here at the bottom, right? And we had this minor cycle here as well. So
I'm not seeing your pointer.
You're not seeing my pointer. Okay. Just give me one moment here. Let me see why that's not showing up.
Arvi, it looks like it's a chart of the weekly on Pan American.
I have too many screens here, guys. I apologize. Okay, 1 second.
No problem.
I'm just going to stop sharing and then share the updated screen here. Okay.
Do you see my face? Is that what you're seeing now?
That's, I think, what, yeah, everyone's seeing here. Okay, screen 1.
I know you guys are missing me on camera.
So now do you see a chart of GDX?
Yes.
Okay, cool. Okay, so this is the overall rising phase that we are in here, and you can see we have had this really nice rally. We did have this minor cycle low due here, so we were actually looking for a long side move here on the upside, and so far that has played out very nicely. On the upside, we are looking for a move possibly higher. Why? Because we still have more time left in this overall rising phase, right? So we could see a move up to 39-ish or possibly higher. So we'll have to see. We can jump over to the daily. This is what we were looking at the time. We saw this rally off of this low, right? And you can see the rally. And then we were looking at this little bit of a pullback here. So we looked for a long side move here, and we've had a nice move back to the upside. So we're looking for, right now we're in this range here. We could easily move up higher, up to this level right here, if I can get my cursor to work, up to this level up here. So that's really what I am currently looking for in GDX. I'm just going to pull up PAAS here as well, just as another one to also look at. So let me zoom out. You can see these are very clear cycles here. So we are in this rising phase here on the weekly, and overall we're looking for only a little bit higher here, and followed by a sell-off once we get into this next move here, which is due in the end of August. So we're looking for just a little bit higher, followed by a sell-off, and then another rally back up in PAAS on the weekly. If we jump over to the daily, we had a long side trade idea here as well, right in this area right here. So far that has been working out well. We are looking for a move. If I share the annotations here, should be this annotation. Let me increase the text so you can see what we're looking at. So we are looking for a move back up to this 31.15 level or higher in this rising phase here in PAAS. So that's what we're looking at. Overall, things are still bullish here as well. So that's what I have, Slim.
Good. All right. Thanks. That was great, Arvi.
Cool.
All right. Paul's asking any updates on TLT, and I will update in that in future speak that I do tomorrow. So I'm not going to give anything away on that right now. It had a 2-point move today on the upside. Yes, that is correct. And remember that we were and believed we were in a rising phase in the bond market. So it's certainly not a surprise. We have a thank you there from Arthur. Thanks, Matt, for getting me to switch to level 4. I love it. When will there be new videos and tools for techs? Okay, so I tell you what, Arthur or anybody out there who is a level 3 or 4, if you wish to send me an email and tell me what you would like to see in tools for techs, because there's already about 85 videos in there, then I will look at what I think would be good information to add another one in there. So if you write me an email, I'll be glad to do that. Everett is asking, what would change my mind about the SPX if it makes a new high? Well, I don't know what you mean by change my mind. I showed you the longer term patterns, and even if it did edge out a new high, it still wouldn't have me believe that we were going to have anything but a large decline into 2020, late 2021. So it would just, change the intermediate term patterns, and that we would be looking at those upside patterns and believing them while they're going on, and believing that there was a bear market still to follow. So, we just, read the charts and say what the highest probabilities are. So if you made a new high in the S&P 500, it would make things positive for the short and intermediate term, but not change those longer term prospects. Please show the daily and 2-hour in the Russell. Morgan wants to know that. I suppose I could do that, Morgan. Here's the RUT, and you wanted the daily and the 2-hour. So here's the daily chart. Look at the daily chart. It's much weaker than the other indexes. It's a little bit surprising, and maybe the thought that there would be the Fed is nearly done, which makes no sense, is they're going to be those third-tier zombie stocks are going to be the ones that are most greatly affected by the pull in liquidity when that ever happens. The CapEx in the world is projected to be down 12% for the year. So I don't exactly see any of these central banks stopping their fairy dust nonsense. And that is probably not the reason you're seeing it more weak. I don't really know then what it is, but you could see the diamond. That diamond looks like a top to me. Again, it only has 3 or 4 days, but then look at the next, you see we have the next cycle projected to be weak, and then moving down again. This projects out to August 29th. So some of these cycles project out longer in the Russell, and that has me believing potentially that the overall stock market might actually take a few extra weeks out there into August going down. So that's a look at the, got to find the 2-hour charts now. I got a million charts laid over each other right now. And here's the 2-hour chart here. And you want the Russell. That's the Nasdaq. And here is the Russell. Let me just get the proper drawings up. That doesn't look like the right drawings. No drawings came up. Ah, there we go. Okay, so there's the 2-hour chart right over there. And look at the momentum. I mean, it's perfectly clear that there is none. You can see in here when the momentum turned positive, the MCI crossed over, gave you the positive reading. The projection oscillators were giving you all the buys in here. Very clear. Here, it turned negative for a brief period, but this never really confirmed in here. I just don't have that other study on here to show you how that works. But so there was a potential sell, and that was aborted right over here when this went neutral. And look at the slim ribbon just laying on itself right over here. So you can see clearly that it is incredibly weak when you look at that compared to the rest of the market. And when you look at this, I mean, you got a little short-term positive trading bias in here, one little buy signal right over here, and now it's just weakening. And now you lost your positive momentum, and it went to neutral. And overall, that just shows you how weak the Russell is compared to the rest of the market. Now, well, speaking to that, when you look at the stock index report live stream, that it's just so clear. You could see the Russell, how it was just so much weaker than the rest of the market. You've seen that over a number of days. For those of you that are pair traders, if you're not taking advantage of that, then I don't know what other information you would possibly need, which is just, it's so clear on there for pair trading purposes, what's stronger and what's weaker. And that's for intraday, of course. So the stock index report is great. There's a question for you from Matt from Roger. The
Okay.
SIR daily snapshot for the SPX shows a positive trend in momentum conditions for short-term and near-term.
Sure.
You predict a downturn for late July and August. Can you clarify that?
Yeah. I'll share my screen here. Okay, just a second. All right, we should see the SPX daily, then I'll pull up SPX 2-hour. So this is a great question from Ricardo. So essentially, we have to look at it. There's a distinction between what the very pure technicals when it comes to trend and momentum are reflecting at any given moment. And then we also have to look at what our cycle work is suggesting as it forecasts into the future. So that's what is happening right now, is that there's a conflict. The pure technical read in terms of the trend and momentum in both of the NDX as well as the SPX, it's very, very clear in the NDX, reflect that we have right now our reversal scalp momentum indicator is positive, our slim ribbon is positive, the previous cycle did not take out the low, we made a new cycle high, and and we're forecasting therefore at the moment that the current technicals in terms of trend and momentum are positive, but yet we have a forecast for a period of risk and lower prices based on the cycle work. So there's a conflict, and you have to go with what what the charts are telling us, and that's what we have right now. And now if I look at the 2-hour chart, you have a similar situation here where we used the 2-hour information for near term. And again, we have a positive reversal scout right now. We have our slim ribbon that has been positive. You know, it's been choppy, but at the moment, if I zoom in here, you can see it's still positive. It's coming down to the lower end of the slim ribbon. So we have positive technicals, but yet we're looking at a turn based on the timing in our cycle work. Slim, anything you want to add to that?
No, I think you've covered it really well. The only thing that you didn't go out as far as August, which is what the question referred to, where there's a conflict between the current momentum conditions and the fact that we're looking for a downturn in August.
Here's the August.
And that's one of them is a cycle projection based on the information out of the cycles. One of them is a projection, and one of them is a current condition. So the current condition, the longer the pattern, the more dominant it is. So when you're looking at this weekly chart, this is much more powerful than the information that you'll get out of momentum conditions in the short term and the near term. We would expect that the cycle patterns would turn those downward. And that would even be a confirmation to us that something is happening, because it's like a domino effect. The near term turns, then the short term turns, then the daily turns, the weekly turns, the monthly turns. It kind of works in kind of a domino effect, with the near term being the one that turns first. So you get a little information off of those little near terms, and then you see if the rest of it kind of follows through. But just because I'm projecting July and August will be weak, we don't really get any information out of the real short-term indicators about that yet. Got that?
Yes, very helpful.
I'm going to go back to gold question a couple times for a second. I see a question there way on the bottom of the chat. I almost missed it because it's on a chat instead of the Q&A. Can you tell briefly about your differences in analysis with Harry Dent on gold price, and why there's a difference between you two great cycle analysts? I just love the way you framed that question, to tell you the truth. It's really interesting that the conversation that I had with Harry, we've chatted a number of times, and we tend to be on the phone for or on Zoom for like 90 minutes at a time, because we talk so much about things that we look at that we have in common. And the other side of that is that Harry looks at very, very long-term cycles. He's talking to me about 90-year cycles. He's talking to me about 170-year cycles. And I'm, of course, looking at cycles that are as short as 10 days. So we're very different in that regard. Harry is a master of understanding demographics. And, he said to me that, he believes that there is a deflation coming up, and that gold is likely to not do well during that deflationary period. Matt, did you want to show that screen that you're showing there? Okay. And then I'm just going to take the screen back from you.
Sure.
So he's, because of what he understands about demographics, he says that he believes that the gold price will be moving down into, fail from around 1800, and then moving down pretty significantly after that. And he's got much, much lower targets for the gold market. I'm trying to find my longer term charts in here, which are just now completely overlaid with stuff, so that I can bring that to you. So I'm just going to go to that's the SPX monthly. I'm going to go to /GC monthly. And I'm going to go to the monthly analysis. And you can see my monthly chart there. Raise your hand. And raise your hand if you understand what you're looking at. Great, great. There's so many people that do this work. It really excites me. So the difference between Harry and I is that he believes that the next demographic positive period begins after 2023. And that's based on the millennial cycle, millenniums. So they don't really, it's nothing like the baby boom cycle because it's not going to be anywhere near as big as the baby boomers. So we're looking for a rally that takes you up into this fourth quarter right over here, fourth minor quarter, somewhere up into here and towards that $2,000 area right there. It would get you up over here. You'd have a little bit of a correction out over here into the early part of next year, and then another upside move. If I time it right in here, it takes me out into maybe mid-year sometime up around 2000 or higher. There's a potential for that level up near 2600 right over there. I wanted to show you that. For it to get up there, I'm not really forecasting it, but there is a target up there. So what Harry believes is that, you know, the market will not make this move because of the deflationary forces out there. I believe because of the inflationary forces by the government that they're printing so much, that you will make this move first and then have a big decline. This period out over here into late 2022 or 23 could completely match what Harry's believing, down to 1500 or down to 800, he says, I think. So I don't think it's 800, but you could easily get down to 1600 here after you get up to 2000. So I think this bull market, this bull move in gold goes through that period. Harry does not, but basically we're both looking for problems out there in 2021, 2022. So we're in line as far as that goes. So a great question there. Gold, Gerald asking if gold closes over the 1800 level. In that case, there's a case for it to hit 2000 this year. Also, do the charts give a reason why silver is lagging? Silver's lagging. They don't give a reason, but it is lagging a little. And it's made some ground on that, on the gold silver ratio. I don't have that chart with me right now, so I would show it to you. But the silver market is a little bit weaker than the gold market that we're looking at here. And I would say the reason is because of the economic conditions out there. I think that that could change very, very quickly. And when you look at copper, which is super strong, it does make me believe that silver is going to catch on and it's going to have a burst in there of some significance. We're going to have to cut off the questions because we're running pretty long in here. I covered the daily and the RUT. Can you zoom? Chris says, hi, Steve. Can you zoom in on the cycle bottom for the next few days in the S&P 500? What the likely bottom would be? Well, I showed that, and the projection in the S&P 500 is down into these fib confluences right over there. Why is it a fib confluence? Well, I got forced to take two lows in there. So I'm measuring from this low here, and I'm measuring from this low here because it broke under the 78.6%. So it gives me these ranges in here. We're projecting down now to this 3093 area right there. It seems to me that that would be the most reasonable. It could get down to 3071. It would not affect anything whatsoever. It would have to get under this low here at under 3000 to have me think anything other than this will be a test of those highs. It would need to be a pretty serious decline. So that's kind of the numbers that we are looking at in there. Do you mind reviewing the gold and Bitcoin long-term charts? Well, we did gold already, and I don't have a Bitcoin long-term chart. A monthly, it just hasn't been around long enough. So if you're a level 2, 3, or 4 member, you will see me look at Bitcoin in Future Speak tomorrow. Anonymous says the Nasdaq reached an all-time high and the S&P high. S&P 500 closed the gap. Russell is weak. Dow failed to close the gap. Any implications for all these phenomena? Yeah, well, the market's thrashing. You have different indexes doing different things. There is no good synchronicity in all of those indexes. When you have that, it's almost like Dow theory, you know, because you don't have all parts of the economy clicking together. That shows weakness. It's not good when you have those kind of disparities. Samaraz wants me to look at crude oil. I'm going to hold on to that because I'm going to do that tomorrow on Future Speak, and I'm going to be updating that chart early tomorrow morning. So please watch Future Speak. Everett says, you guys are awesome. My go-to resource for trading. Well, thank you for that. We're really very thankful. Tobias says, so the cycle tops can be anywhere in the area between the cycles. That is correct. But the tops are also influencing the following cycles. That is correct, because what it means is that if the top is a higher high, the probability is that the correction will be somewhere in the middle, and then the next cycle will have a higher high. It sounds like past and future cycles are connected, right? Well, they are in energetic forces, absolutely 100%, and that is one of the secrets of cycle analysis. So don't tell anybody that isn't out there. Do you have a monthly chart on ZB with cycle analysis? I believe the next big trade will be short bonds. I do. I think I have it in ZN. And there it is right there. So there is your picture of when the bond market is likely to have the big decline. Right now, you are just now in the bottom right over here. And that is that, you know, we were looking for the decline right over here and it barely would give us any. Remember, I was short and not making any money and even losing some. So then you get into this rising phase. I got that broken line there. That probably takes you up somewhere into the early part of next year. And 2021 looks like the potential for a very large decline in the bond market. So that's a quick look at that. I don't have the ZBs, I only have the ZNs. How about Bitcoin? You can get that tomorrow in future speak. Do you still see a short-term downtrend in SPX for next week as per your charts? I do. There's nothing that's changed. We're looking for the market to move down only for the next few days. If the equity is correct in the coming weeks as you project, do you believe GDX will be impacted contrary to gold? The answer to that is probably. And the reason for that is because if it does fall hard, the liquidations tend to liquidate all stocks because they need to raise money and margin calls. So we saw the GDX and we saw those stocks get hit when the market got hit in 2018. You saw it got hit in March. So yes, they do actually do affect the gold stocks also. Anonymous says, can you talk about Tesla, please? It's such an explosive move. I'm curious if there's much more left or if this thing is getting tighter. Well, I would have thought it would get tired already. But what's interesting is when it got past 1,000, we projected to 1,400. It got there. It got there, shocking me because I did the projection based on the patterns, but I did not really expect that it could really do that. So let me just get back to the weekly chart right over here. And there was our projection up to that fib extension zone. And you could see it got there, which is just a shock to me. We're expecting it to stop there. The fact that it is trading up there is just ridiculous. So what? They have 90,000 cars a quarter versus 10 million cars that are done by the other car salespeople. Look at that, 2021 earnings projection. It's trading at 150 times the next 12 months PE. If I told you this is like, reminds me of 2000.com. Well, this is one of the reasons why. This is sickeningly overpriced and it's sucking everybody in my opinion, but look at the patterns. Because of this, we're only projecting a move down to about 1150 or so on the downside over coming months, though that might be a little bit optimistic. Maybe down over here to 1,000 makes a lot more sense in Tesla. I think we're running out of time here. Any quick update on the ready to fall? Yes, I'm going to do an update on that, Paul, either this Thursday or the following Thursday in a video. I'm getting a ton of questions about that. The stocks went absolutely bananas after I did the video on the 16 stocks that were super overbought, that now they've gotten bizarro world overbought. Unbelievable. How will this earnings shape up for SPX and NDX? Well, I don't really know, to tell you the truth. All I can tell you about is that based on earnings projections for the next 6 months, they are incredibly overpriced. How do you analyze earnings and major indexes? I don't spend a lot of time on earnings, to tell you the truth. I really look only at the technicals. That Tesla chart right over there, so you could see it got up and tested that fib extension right over there. Do you project us getting below the March lows this year? I do not. I did before, but I have lifted way above that in recent months. Hoss, really love the live show where you answer our questions. Thanks, Slim, Arvi, and Matt. Eric, what a fantastic lesson. Thank you. Well, thank you. Stellar job by all. You can, and what you can say about Magic Man, 2 thumbs up, Slim. Well, I absolutely love that. Guys, I'm gonna, Matt and Arvi, you got any closing things you want to say?
Well, it's been a great live session, Slim. Fantastic analysis. It's amazing to be able to listen to
Awesome
you
job.
for all
Yeah.
these. So,
Fantastic.
yep.
Yeah, that's great.
Enjoyed the audience.
You guys got me in my wheelhouse.
Yeah, great audience today. Record numbers. So let's keep it up. Take care, everyone.
So don't forget, guys, take a look at this slide. Important. Membership issues. If you're not a member, want to become, or you want, there's an issue with the website, write to support@askSlim.com if you want to upgrade your memberships. Slimulator, Momentum Tracker, Stock Index Report, ETF Report, all of those, you write to Matt@askSlim.com. For the trade ideas, Slimulator rankings, chart analysis, any things related to the charting work that we do, you can send that to Arvi@askSlim.com. For level 4 chart requests and level 3 and 4 questions about trading and analysis, you send those directly to me, and then we engage on those. The way we do it on the level 4 charts is that I do the initial analysis. I send them over to Arvi for his review and to essentially put in his inventory, and he does a little cleanup on them, and then he sends them over to our level 4 members to be live on their site. That is it, man. This was a fantastic hour. Thank all of you very much. Those of you that are here for the first time, and if you're not a free member, at least become a free member. And again, write to Matt@askSlim.com if you want to hear about some of the specials that we may have going forward, so that he can send you that. Thank you very much, and we are done with Ask Slim Live.